Hello and welcome to another update video about eGold. Well, the eGold chart is still hovering in, unfortunately, not really a breakout structure. Still hovering in the support area. We know that obviously breakouts, especially in the crypto world, often happen from ugly structures. That's just something we know, but you cannot really predict it. All I can share with you is a relevant support area that so far has been tested, and the market has shown a little bit of a reaction to it, and that's the orange support area. And I can highlight to you that one more high is a reasonable expectation as long as this support area is holding. Now, this support area ranges from $36 to $57.88. Now, I'm not suggesting we will go all the way down to 36. However, it appears likely that we could follow the white count. Okay, so a C wave lower is definitely a possibility. Nothing I would want to really predict because, to be honest, we already have come down far enough in the fourth wave there. And the yellow count is basically the scenario in which a more direct breakout is possible. Because a typical target for a fourth wave is the 38.2 retracement, and that's at 48.28, and we've reached that already. Okay, you see here that was on the 23rd of January. The market has formed a low. The problem is the move up looks corrective. We have overlapping price action and not clearly a low in place. The idea is that as long as we're holding the support area, you know, we should be looking at higher. But of course, we have to give the market a little bit of flexibility. I would not try to trade this coin like, you know, every single wave and everything. And therefore, I'm not offering you a micro count here because there is literally no reliable micro count. However, what I can offer is this support region. And again, ideally, we don't even go down to 36. The thing is, even in a fourth wave, even if we're dealing with a larger diagonal pattern, the 50% fib level should ideally not be broken. So we could maybe narrow down the support region to 41.70 to 57.88. But even if that 41.70 level isn't holding, we might give it that space that it needs. You know? It's just then it would turn into a massive wave 4, which I want to avoid. But yeah, as I said, it's the same scenario. It's just, do we need to come down a little lower in this wave 4 or not? At the moment, it appears likely. I really see it as very balanced probabilities, but both are part of the same scenario, really. Okay, so the question is only what kind of micro count is currently unfolding there. And even here, the market, I think, hasn't decided itself. Okay, so we have a very clearly corrective move up. You see that here in the white count, for example, the move up is clearly looking like an ABC structure. Let's put that onto the chart. A, B, C. How could I say that? Well, first of all, visually, it really looks like a three-wave move, and B waves can be ABC structures, especially if the C wave reaches the 100% extension level of the A wave. So nearly reached, a little shorter, okay, but close enough. I could call that, it's definitely not strong enough, that move, to call it a third wave, like 1, 2, 3, definitely not. But then that's the challenge with these diagonal structures. You know, it's an overall diagonal pattern. Don't think we need 5 waves. We don't. Okay, I mean, not here in this microstructure. Bear in mind we're dealing with a larger diagonal pattern. So the fifth wave is likely an ABC structure. Now this ABC did not go high enough for all of wave 5, but what could be the case is that this was the A wave, ABC in wave A. We could now see a B wave and then a C wave rally. So that is, I think, what is a reasonable expectation, okay? But that cannot be predicted. So we cannot confirm at this stage that low is in. We can't. We could only lean towards that once we see a B wave pullback completed, and then when the C wave shows us the first 1-2 setup. Because the C wave is itself a 5-wave move. So it would be 1, 2, 3, 4, 5. So the 1-2 setup could obviously offer us another entry point. But again, the support area is here now, okay? So the price is already in support. The lower we go basically in this support area, the better the reward to risk ratio, and the rally should take the price in wave 5 to approximately $100. At least that is a larger degree fib. We can specify that further once we have the B wave in place, okay? Then we can look at where the next target might be. But that is just a larger degree fib level, fib target, okay, based on the length of waves 1 through 3. Then we go to the low of the wave 4, and the 61.8 extension is a common target. Now the one that comes before that is the 38.2 retracement at $75. But this is basically then not even forming a new high. So I'm not too focused on that. Yeah, so I'd be watching the $100 mark also because it's a psychological one, you know, and then we have 5 waves up, and then we can look for the 3-wave pullback in wave 2. So bottom line is, against the support area, we can focus on higher. We should see one more high in wave 5 of 1. How exactly it's going to get there is a little bit unclear at this stage. What we can watch for is obviously if the current pullback or the next pullback is corrective, yeah, and could be a B wave in yellow. It might set up it might set up the price for a jump in wave C in yellow to the upside. I can give you, yeah, let's say a micro support, nano support area here for the wave B pullback, but it's not. I wouldn't even call it a setup. It's just a few support levels to watch. And here I would normally then use the area between the 50% and the 78.6 fib level. Now sometimes B waves are extremely shallow. So here it's between 55.79 and 49.26 as an additional support area to watch for that B wave pullback and that C wave to start from there. That's my update about eGold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.